The risk disclosures appearing on the screen are important for you to read and understand. Please pause the video now to read through the disclosures or listen in as the disclosures are read aloud at the conclusion of this video.
This is Don DeBartolo, a senior commodities broker with Daniels Trading in Chicago. I'm the editor of the Trade Spotlight Advisory Service. In this video, I'm going to review a past trade recommendation, in particular the chart formation, a trend line formation. Trend line formations can be applied to any commodity chart. Here is a chart of the September 2012 30-year Treasury bond. Trend lines and subsequent breakouts are an old school charting technique. There should be at least 2 points on a trend line for it to be a viable trend line, although the more the merrier. Additional points on the trend line establish a stronger support or resistance level. This particular chart has 5 touches on the trend line. 145.26, the low from May 17th. 146.02, the low from May 22nd. 146.28, the low from June 15th. 147.23, the low from June 29th. And 149.08, the low from August 3rd. So we're seeking a close below the lower trend line to trigger the breakout to the downside. In addition, there should be other technical indicators pointing to a downside trade as well. The trend should be in the direction of the trade. At this time, the Trend Seeker, a U.S. chart company tool to determine the trend, was indeed in a downtrend. In addition, other indicators I use in my trade decisions, like a MACD, exhibited sell signals. The market closed below the lower trend line on August 7th. So for the following trading session, I recommended establishing a short position at 149.02. I used the 50 entry method to calculate this price. I took the low from August 7th and the point on the chart where it looked like it crossed the trend line and split the difference. Sure enough, on the next trading session, the market retraced to 149.03, filling our short order in the process. As you can see, my initial stop loss was at 150.02. This was above recent highs and the trend line. My initial target was at 145.26. This was the first point on the trend line. From there, I managed my trade accordingly and sent out updates via the Trade Spotlight Advisory Service. Now I'll also use trend lines in addition with other chart formations. It just provides additional confirmation for breakouts. If you're looking for trade recommendations based on chart formations and technical indicators, I encourage you to follow my Trade Spotlight Advisory Service. Happy trading!
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels Trading broker who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Trading, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure webpage accessed at www.danielstrading.com at the bottom of the homepage. Daniels Trading is not affiliated with, nor does it endorse any trading system, newsletter, or other similar service. Daniels Trading does not guarantee or verify any performance claims made by such systems or services. Stop orders do not necessarily limit your loss to the stop price because stop orders, if the price is hit, become market orders and depending on market conditions, the actual fill price can be different from the stop price. If a market reached its daily price fluctuation limit, a limit move, it may be impossible to execute a stop loss order.